Hi everybody, welcome to our weekly update on the stock market and all things trade. With me as usual is my stock market expert, Simon Rothman. So here we go, Simon. How have you done this week? How much money have you on?
I don't think we'll go into that. I don't think we'll go into that one this week. It's been a tough week on the stock markets, especially the UK stock market, which has been performing very differently to the US stock market.
Is that normal?
Generally, they tend to move up sort of in tandem, but the outperformance of the US stock market has compared to the UK market has been vast. To put it into context, the S&P 500, which is a good representation of the US stock market, has reached its all-time high this week. In contrast, the UK market, the FTSE 100, is still 24% off its peak. So in context, if you've been invested in the US market, you've maintained the value of your investments and made money. Whereas if you've bought the UK market, say a couple of years ago, on average, you could be still 24% down on your investments.
Well, I heard that gold's taken a bit of a dive.
Well, we'll look at gold in a minute.
Oh, okay.
I'll just finish off with a sort of a pointer to what's been going on in the US market. Apple, which is already the world's biggest company, has this week exceeded the $2 trillion dollar market value.
Do some companies turn over that?
Well, this is the point I was going to make. To put this into context, it's about the GDP of Italy.
Wow.
It exceeds the GDP of Russia, Brazil, and Canada. They have lower GDP than 2 trillion. It is also almost the value of the FTSE 100. So the top 100 companies in the UK only just exceed that market valuation. So it's a tremendous figure, and it's sort of beyond me how the share price can keep rising in that company.
Well, it's not bad for a company that was almost bankrupt a few years ago, is it?
I don't remember that far back. You can remember further back than me.
Yeah, well, they brought Steve Jobs back in to save it. Yeah.
Well, that's
so the film says that I watched.
Yeah. So that kind of company, along with other companies such as Amazon and Facebook, have really driven the US stock market forward in the last, certainly even this year with the pandemic. It's not affected their share prices. They've all grown tremendously. And so anybody that's been invested in those areas, unfortunately being based in the UK, by default, one tends to probably invest more in UK companies than US companies, although there are funds available which you can buy, which will invest in the US companies.
Do you think it's because so many companies are going bankrupt, no one's got any money? No one knows what companies to invest in because there's less stuff about.
I think what's happening is it's certainly in the US where you have these sort of very large tech companies which we don't really have in this country, and certainly the innovative ones such as Tesla and you could even say to some extent Amazon, companies like that. I think the American investors are sticking to what they know best, and these companies, with the exception probably of Tesla, they are still growing even in an environment where the economy is slowing down. These companies are still growing, and some of them have very strong balance sheets. They have a lot of cash sitting on the balance sheets, and they're still producing cash. But so you could look.
Who are your favourites?
Who are my favourites?
Who would you recommend? I know you don't recommend buying shares, but what are your predictions?
Really, if I could predict the market, I would probably already be a millionaire. So
I thought you were.
I wish. Just as a general view, what I would say is, if you were looking at these companies which have already massively outperformed, whether you think that's going to continue or whether you think maybe it's gone too far. The FTSE companies, the UK companies, are 24% off its peak. So there are reasons for that. You could say there may be some opportunities within that sector because we are 24% down on where we were. So it just depends what kind of companies you like the sounds of. I mean, certain companies like the cruise liners, for example, Are they going to start making any money again? I mean, or the share prices have been battered, but are they ever going to start making money again?
What do you think?
I think it's going to be very difficult for them. I think it will be difficult because a lot of them are taken on debt to see them through the pandemic because they have no income coming in at the moment, and they're paying high interest rates for this debt.
Yeah.
Personally, I think the airliners and the cruise companies, even though the share prices have been battered, I think they will struggle to get back, even though you could perceive them as maybe more value stocks. But I think it will be difficult for them.
What about currencies? We never talks about the currency markets.
The currency market is massive. I mean, it's not something I would trade in myself. I think I'm not an expert in the currency markets, but globally, the currency market is probably has more trade going through it than the stock markets. It's absolutely huge,
They all
trillions.
seem to be down as well, I noticed.
Well, currencies, which ones are down? Obviously, if they're down, there's something they're up against. There's something that's up against them.
I was just looking at a general trend the other day. I noticed that they're generally down.
Well, the dollar is at its weakest for some time now. So the pound has actually moved up in the last few weeks against the dollar.
Right.
It's moved up over 5%, around the 5% mark against the dollar in the last few weeks. So usually when one currency is down, another currency is up. So it's dollar weakness is the flavour of the month at the moment.
I suppose when it comes to shares and buying currency, that one person sells, one person buys, and they both think they've done a great deal.
Well, you hope so. You hope so. So, so like I say, dollar weakness is actually what's been fueling some of the fuel for the recent rise in gold, the gold prices. Now, they had reached a peak last week. Gold had exceeded its 2011 high and was trading well over the $2,000 an ounce mark. That has fallen back considerably. In the last week or two, it's fallen back over $100 an ounce. Again, whether that's an opportunity to get in or maybe say it's got ahead of itself is the question. Personally, obviously the global weakness, everything that's going on in the uncertainty, that's what's really pushed up the price of gold. And
there's also, I mean, I was thinking the other day, I was reading somewhere, there's now an inquiry into some of the way the governments have been spending money and what they've been spending it on. Apparently, there was a company that was given hundreds of millions of pounds, which showing dormant accounts of a company's house and actually have £100 share capital raised. That's interesting. But how do you think that COVID is going to affect the marketplace? I mean, there's a lot of vaccines coming out and fortunes going into them. Is that going to be a short-term gain? Is it worth looking at things like that? Or
generally, the market tends to look ahead. So it's a question of how far it looks ahead. Now, in terms of the vaccine, the UK market may bounce if the vaccine comes through. What's been happening in the US is their markets have been ploughing ahead on any good news about the vaccine. The quantitative easing that's taken place, all the money that's been pumped into the economy, people have been going into shares because they don't see there's anywhere else they can put the money because they can't earn interest. Now, you would think that might apply in the UK, but it really hasn't gone the same way in the UK because I think the UK has other problems probably besides that. So the vaccine talk has not really made a huge difference one way or the other in the UK market.
What I was looking at was if I was going to invest money in the stock market, then there are contracts and business being awarded to all sorts of companies, especially in the where they've been developing virus and treatment. But hopefully, that's going to be a short-term investment. But what it would show is that all of a sudden these companies have got a massive spurt of income, and it seems to me that that's possibly not sustainable because obviously once everyone's inoculated and things go back to normal,
I think what's been happening, certainly within those companies that are looking at vaccines, is the share prices of those companies have already risen tremendously on the back of the fact that they might, or they are in the process of developing vaccines. So those share prices have already risen a lot for those companies which have been perceived as being the ones that are going to introduce some kind of vaccine. The other thing you need to look at is possibly the size of the drug company involved. So if you've got a company like AstraZeneca, which is a UK company, it's currently the largest UK company by market capitalization. Now they have a large number of drugs in their pipeline and also that they produce. So if they were to bring in a vaccine, and it would assist the share price probably, but because it's already a large drug company, the impact of that might not be that positive on the share price. Whereas if it's a small biotech company, for example, a specialized company that doesn't have much income and they bring in a vaccine, then that's going to have a huge impact for them because that income is going to be very material to the size of the company.
It won't be sustainable.
Well, I don't know the answer to that. Is it a vaccine that's going to be used annually, like a flu shot?
Could be. It's a takeaway here that, like anything, just be aware of one-trick ponies.
That, yes, certainly. But again, it's the thing with that is that there are some of these one-trick ponies have performed remarkably well.
Yeah.
And if you'd have got in early with those, you'd. I mean, just a prime example. Are we on Zoom at the moment? Are we using Zoom?
I get it. We have our own software. We have our own.
So Zoom has multiplied 2 or 3 times this year in value. Now, if that falls out of favour or other competitors come in, if you've bought the shares when the shares were half what they are now and you then sold them, you've already made your gains. Yeah. But there's always that risk when it comes to companies that have that sort of one main product. But
so because we're running out of time, gold. So it's taken a bit of a dive.
Yeah.
And that's something they could get a gold medal for, isn't it, for its diving?
Hey.
So I think I've used that joke before, but there we go. So gold, think that's coming back. Will that be okay?
It's probably worth, if you were to have a portfolio of shares or some money invested, it's always worth having something in gold. And when I say gold, I don't necessarily mean owning the actual physical gold in your drawer. You can buy gold funds, ETFs, which will own the gold for you. But it's always worth having some as a protection against sort of high inflation or uncertainty in the world.
It's all exciting stuff.
It's all exciting stuff.
So we're just going to end up this bulletin. We've gone over time of it because Simon's so interesting. I mean, he's so interesting in real life as well. It's not put on. This is Coffee with Simon. This is Conversation with Coffee with Simon wherever you go. So if you do have any queries or you just want to have a chit chat with somebody, my number will come up and just contact me and I'll put you on to Simon. Okay.
Okay. Thank you.
See you next week.
Bye.